going on, guys? Another red day for AMC today. Not even close to as drastically red as we've seen previously, but a red day nonetheless. I'm going to try to fly through this video, so I'm just going to jump right into it, starting with the full macro perspective on AMC. Starting from IPO, this green dot here would be the equivalent of the January squeeze, the retrace that you see here. So the January squeeze, the retrace. This yellow would be the June squeeze. Then you get this V shape that you see here. It's actually a lower high right here than it is right here. So the V shape, and then another V that you see here, and then the macro break right here, this gap down in this blue box, and the W that plays out sideways before you get into the downtrend. Both downtrends being a descending wedge. Just stair-stepping down one leg at a time until you get to the flat portion on both sides, where you have 3 touches on the bottom. 1, 2, 3, your breakout iteration right here, your retest, macro break again, and then a reset back into the January squeeze, which is what we're looking for. So the equivalent over here, 1, 2, and 3 bottoms, the breakout, and now the retest. Very, very drastic retest, but it is a retest, and it is holding up nonetheless. Moving on to the macro I show on a daily basis. This is just showing the downtrend from 2017 here. Again, macro break, this gap down, macro break right here, this gap down, the W that plays out on both sides, and then 6 points taking you to the end of the blue on both sides, and then from that 6 point dropping to the flat portion where you have 3 touches on the bottom, 1, 2, and 3, and over here 1, 2, and 3, and then you get the breakout move, the retest, which is what we're in now. Once the retest confirms, it's a gap up into a straight line into your squeeze. That's what we're looking for. The retest is holding up. This is a very drastic retest. I've gone over all the reasons multiple times. I could just really quickly do it again. AMC and APE met at the exact same price, down to the penny, going into the conversion on Friday, filling all the downside gaps on the daily, triggering stop losses at all-time lows down here in the original flat portion, shaking out paper hands, all the reasons I've been giving previously. Now, getting into the actual retest, and this is the macro pattern on AMC, a descending wedge, and in the final iteration, we had this bilateral triangle, and it was very, the support was very strong up top, resistance very strong on the bottom, and getting very, very tight here towards the end. This bilateral triangle actually took us outside of the wedge, and the breakout coincided as I said it would. I said the breakout out of this pattern would coincide with the macro breakout of the wedge, and that's exactly what happened. So you got the breakout of the micro pattern, you come down to retest, bounce off, and then you knife down to retest the macro pattern, being the descending wedge. So this looks perfect, just waiting for this retest to finish up, moving on to the next. I want everyone to keep in mind where the halts have been. This is just confirming that this is the pattern on AMC. This is the breakout, and we are in the middle of the retest. So halted January and June, and then you break down from the June flag and trade in this descending wedge here. Halted here in March, halted here in August, again halted in March, and then again halted in, this is actually end of July when we broke out. But all 3 of these halts here showing you this is the descending resistance on the macro. The halts are showing you that. And then this is the breakout, halted because we had to retest the macro, and that's what we're doing right now, retesting the macro. Again, we've seen halts to the downside as well. I don't have all the halts shown here, but we have seen halts to the downside to preserve the pattern. Again, these halts are just to make sure the algo runs the course properly. The algo runs out the pattern the way it should. So this looks very good. Again, we're in the middle of the retest here, and we're holding up. I'm going to be getting into this, but I absolutely do not want to see another a red day tomorrow. So this is just zoomed in even more. The final iteration, the bilateral triangle that I was tracking. This was 10 months in this pattern. It coincided with the breakout of the macro wedge, retested the micro pattern, bounced off, and then knifed to retest the macro pattern, being the descending wedge, and that's where we are now. Retesting the descending wedge here. So this looks very good. I'm expecting to turn around and start seeing some very, very green days. Moving on from that, here it is zoomed in even more. And the reason I absolutely do not want to see another red day tomorrow is because this descending trend that we have here, so this white line here on the bottom is the macro. So that white line on the bottom is this line here, the previous resistance, this descending wedge, now acting as support. Here's the breakout and now retesting. Zooming in on the retest here, this is the previous resistance acting as support in the white. We actually wicked through it today, but reclaimed, which is perfect. That's fine as long as we hold up. That's all that matters. And we have this descending trend here in the green, which is keeping us down to our retest. Now, there's a few different ways you could draw this trend. The way I have it drawn right now, we're actually poking through it. We absolutely want to break this trend tomorrow, because if we don't, this trend will be taking us to new all-time lows tomorrow. I don't think that's going to happen. Absolutely, I do not think that's going to happen. I don't want to see that, and I don't think it's going to happen. But this trend, if we do not break it after hours into intraday tomorrow, this trend will take us to all-time lows tomorrow. So definitely do not want to see a red day tomorrow. I want to find a bounce. I would not even mind to wick a little bit lower than today's low at 1090, as long as we wick lower, reclaim, bounce off, and close either flat or green. I absolutely do not want to be held under this trend all day tomorrow. Again, because if we do get held under this trend all day tomorrow, we will be forming a new all-time low on AMC, and we do not want that by any means. Moving on. Getting into the retest and the tracking now. Now, I've been tracking the flat pattern for months, and it's perfect. All of the indicators, the RSI, the EMAs, the gaps on the daily, it's all perfect. And where I last left off, again, this is where I was live streaming for that week, 3 weeks ago. Live streaming and tracking this iteration here. This is the breakout and retest iteration of January 2021 on the left. And this is what we were tracking from the gap up July 24th until today, tracking this iteration. This gap up is the breakout, this gap down, and this pattern you see here is the retest. You confirm the retest, bounce off. From here, you gap up a straight line into your squeeze. So that's what we're looking for right now. So 3 weeks ago, I was tracking this. I was live for it. I was drawing the price action board before it even happened. It looked perfect. It still looks perfect. The only difference being that we gapped lower than we would have liked to see. We were looking for a gap down to this white line. We gapped down lower, and I've gone over all the reasons. So really quickly going over this again, you get the gap up on both sides you're looking for. This is the breakout. You get this crazy wick on both sides. Come the rest of the way to the top on both sides. Come down to the red. Get the stair step move on both sides. The uptrend, breaking below the trend here and rejecting before you gap down to your retest confirmation move right here. And this is where we left off, and then updated. Here it is. So here is the gap down you're looking for. So again, gap up, this is the breakout. Gap down, this is the retest, the confirmation of the retest, and the bounce off. From here, you gap up a straight line into your squeeze. That's what we're looking for next. Again, the gap up is the breakout, and the gap down is the retest. Now, this gap down lower than the white line, again, not only because we had to retest the macro, as I previously mentioned, the slope of this trend, we had to come lower to retest this trend. We also met APE at the exact same price down to the penny going to the conversion. That was always going to happen. That was always going to play out that way. Filling all the gaps to the downside on the daily, shaking out paper hands, all of the reasons I've gone over multiple times by now. But nonetheless, the price action from the gap down is playing out exactly how it should. From the gap down, you get an uptrend, as you see here, and then you get a downtrend to a lower low, as you see here. The downtrend is really slowing down now, not seeing minus 20, minus 30% days now, minus 10% today, but the downtrend is slowing down. And again, I absolutely want to break that descending trend tomorrow, because if we don't, it will be taking us to a new all-time low. I don't think that's going to happen. I'm just pointing it out. So what we're looking for next is an uptrend. We're looking for this uptrend here, and then the confirmation move. This will be very obvious, as it should be taking us somewhere into the $80 to $100 range. Just landmark-wise, this move should take us past the top, as you see here. This top is roughly $80, so this move theoretically would be taking us to $100. It's probably not going to happen all at once. I would be shocked if it did. More or less, I'm expecting if we do start the uptrend tomorrow, it would be a very slow, choppy uptrend, something like this. And that would probably take us anywhere from like the $14 to $20 level once we actually start the uptrend. So that's what we're looking for as far as the retest goes. The tracking is still perfect. Very, very exaggerated retest, but the movement is playing out exactly how we want to see. Now, going over the downside levels, because we actually filled another gap today. So all of the gaps on the daily are filled, but I mentioned there's a few gaps open on the extended chart. So the yellow line here is the low of the day today. 1090, low of the day today. We filled this gap right here. This was a previous gap open at 1122, I believe it was. Yeah, 1122. 1090 was the low of the day today. There is one more gap open. It's a little bit lower, 1083. So low of the day today was 1090. One open gap left on AMC to the downside is at 1083. This candle right here that gapped up here, it never gap filled. So we came close to filling this today. I would not be mad to fill it tomorrow, but after this level, 1040 is all-time lows on AMC. We do not want to see that. We came within 50 cents of forming a new low today. Again, I don't think we're going to, and we absolutely do not want to see that, but I would not be surprised if we filled this gap tomorrow. I would also be fine just leaving it and just getting the fuck out of this range. Last thing before I end the video, the fib spiral. Again, all-time lows to all-time highs on AMC and starting at IPO. First touch point that you have on the spiral is the original flat portion leading to the January squeeze in 2021. That squeeze comes down and bounces right on this as support. And then you get the June squeeze, obviously rejecting the top of the spiral here, come down, and now we are at the end of the spiral at the resistance and fighting for the breakout right here. This is very blurry, and this is pointing at a price target of $2,600 roughly, which is more than my price target. Again, my price target is just Fibonacci pulls, Fibonacci extensions. $1,400 is my price target. The Fibonacci spiral is pointing at $2,600. And that's it. Really quickly, just jumping into the Fibonacci spiral is zoomed in now. So this is the resistance of the spiral that I was just showing you. So right here, again, we're at the end of the macro in the retest iteration, at the end of the macro, at the end of the Fibonacci spiral here, and here it is zoomed in. Here was the gap up that we were looking for. This was the break out of the bilateral triangle, which also coincided with the break out of the macro descending wedge. Retesting the bilateral triangle here actually brought you right to the resistance of the spiral, and then you gap down from there. We got the climb we were looking for. Just tracking wise, we wanted to see a uptrend from the gap down, and then we wanted a lower low from that uptrend. This is coming down to retest the macro of the descending wedge now. So poking through the resistance of the Fibonacci spiral here, gapping down, you get the uptrend here, and then just straight fucking blood all the way down, and we are sitting right at the resistance of the spiral here. Tomorrow's candle is pretty much going to open up on resistance of the Fibonacci spiral. So a green day tomorrow would be huge. I could be mistaken as well, but Volkswagen actually saw 6 straight red days before it squeezed. I showed the Volkswagen chart, the UR here coming all the way back down to the baseline, not forming a lower low, but coming close to it. Volkswagen had a very similar move right before it took off, 6 red days in a row. Obviously, this isn't a red candle here, but it's an inverted hammer, pretty much opened where it closed. Closed where it opened. Might as well be a red candle. Nothing but blood here. We're looking for a break out of this Fibonacci spiral. That break out of the Fibonacci spiral will actually be when we form this uptrend, which will be the confirmation of the retest on the macro, which is right here. So a few things are going to happen at the same time. We're going to confirm this retest off the wedge here. So get the bounce we're looking for, confirming the retest of the macro pattern that is a descending wedge, and it's shown here by the halts. So we're looking for a bounce, a confirmation bounce here. Tracking wise, that's what we're looking for as well. Getting the gap down, the uptrend, and then the lower low. We're looking for this uptrend now. From here, you gap up, and it's a straight line to your squeeze from there. And at the exact same time, we will be breaking out of the Fibonacci spiral. And again, The spiral is pointing at $2,600, so that's what we're looking for. And I think that is pretty much it for the video. If my chart is still all set up, I do want to show one more thing. Just give me 2 seconds. I probably should have just done this before, but just bear with me for a minute because I want to show this. So I'm gonna be pulling up an overlay of GME. So just give me 1 second. And I want to show something. Because AMC and GameStop are the exact same stock. And I've said this multiple times. I don't care if you're a GameStop elitist. I don't care if you're an AMC elitist. I own both, and both are about to squeeze. Both squeezed in January, both squeezed in June, and the price action was pretty much the same, all the way through this. So the orange line is obviously GameStop, tracking right over AMC here. All the movement's the same all the way through. And this is pretty much just showing that AMC and GameStop are testing the macro breakout of their patterns at the exact same time. GameStop actually is already in the uptrend. So this looks very good. Both stocks more than likely will be squeezing at the exact same time. And it looks like we're moving up after hours, 11:15. That is good. Breaking that trend I was talking about. You know what? It's fine. We'll save it for tomorrow. We absolutely do not want to form a all-time low. And this trend, if we don't break it, will take us to an all-time low tomorrow. Again, I don't think we're going to. I'm just stating the facts here. And just from a fractal standpoint, we do not want to see a new all-time low in AMC. So that said, that's pretty much the video. I'll catch you guys with an update tomorrow. Let's see some fucking green tomorrow.